In the previous class, we just started with question number 1. Question number 1 of accountancy. Numerical question. We'll just see it again. Once again, we'll see the question. Okay? Question number 1. I'll explain the journal entry once again when we start doing this problem. We are going to apply that in the question now. So, this is the question number 1. On April 1st, 2010, Bajrang Marbles purchased a machine for rupees 2,80,000. That is the purchase price. And rupees 20,000 is spent on its carriage. Carriage means for transportation. And rupees 10,000 is spent for installation. Okay. So the showroom price of machine is given, transportation cost and installation cost is given to you. It is estimated that its working life is 10 years. Estimated working life. It is expected to be working for 10 years. And after 10 years, its scrap value will be 20,000. What was scrap? I told you about scrap the previous day. The waste at the end, after the life period, when you sell it, what do you get? Okay, the value. That is scrap value is 20,000. This much details is given to you. I hope you have taken the question. See the sub question A. You are asked to prepare a machine account. We will be preparing a machine account, depreciation account for the first 4 years. It is expected to live, the period is 10 years expected, but we are asked to prepare account for 4 years. I'll show you how to do. By providing depreciation on straight line method. We are going to provide depreciation straight line method. Okay. That is A. And B, again you are asked to prepare machine account, depreciation account and provision for depreciation account for the first 4 years in the same straight line method. Don't worry, I'll tell you how to do. Okay, so the first thing you need to do is, we need to find out cost of asset. Showroom price is given, carriage cost is given, then what else? Installation cost is given. Okay, so what is the cost of asset? It is all these together. Cost of asset will be showroom price plus carriage plus installation. That is the cost of the asset. Total, how much is spent for that asset? That is cost of asset. Yes? So cost of asset is 2,80,000 plus 10,000 plus 10,000. It becomes 3 lakh. So machinery is worth 3 lakh. That is cost of asset. Now the next step is to find out depreciation. Next thing we are going to do is depreciation. Since all these details are given, this is the formula that should be applied to find out depreciation. How will you find depreciation? Original cost. Original cost means the cost of asset. Original cost minus scrap value divided by estimated life of asset. This is how we will find depreciation when all these three are given to you. Sometimes in the question you will be given a rate, 10% depreciation, 20% depreciation. Then it is just 3 lakh into 10 by 100 or 3 lakh into 20 by 100. That is the way we find out. But here in the question, we are given all these details. Original cost, scrap value, estimated life of asset. So we have to do it this way. So how much is the original cost? 3 lakh, 3 lakhs minus 20,000 divided by 10. 10 years. In the question it's given estimated life 10 years. So we get depreciation as 28,000. 3 lakh minus 20,000 is 2 lakh 80,000 divided by 10. Cut out 100. So it is 28,000 depreciation. Complete this. Then we'll start doing the account. We'll prepare the account. Over? Completed? Okay. Is it over, Rahul? Finish? Okay. Okay. So next thing, we are going to prepare the machinery account. Okay, machinery account. I'll tell you this. Before that, let me take you again to the journal entry. As for the first method, the sub-question A is related to this. Charging depreciation to the asset account. We are going to see how the depreciation is going to be written in the books of accounts. Okay, what is the treatment of depreciation in the books of account? How are we going to record this? That is what we are going to do. And we saw that we have two methods. First method is charging depreciation to asset account. Next method is creating provision for depreciation. These are the two methods, okay, for which we'll be adopted for recording this item in the books of account. We are going to see the first method. As per the first method, look at the first journal entry. When depreciation is charged to asset account, what is the journal entry? Depreciation account debtor to asset. Correct? Depreciation account debtor to asset. Based on this question, which is the asset? What is the asset? Is it building? Land? What is it? Machinery. It is the Machinery. So what would be the journal entry? Depreciation account debtor to machinery. Correct? Journal entry will be depreciation account debtor to machinery. Now, in the question, you are asked to prepare which account? Machinery account. Correct? So, we are going to prepare machinery account. The same account, the T account, ledger account, that is the account. Okay? Machinery account. So, now tell me, in machinery account, what is done to the machinery? Machinery account is credited. Very good. Credited. So, that means it is credited by what? What should come here? What should I write here? Depreciation. I can see Anish giving me the answer. Depreciation, even though he's not unmuting, I'm reading his lips. Okay. So what is the journal entry? Did you understand how this is being accounted? In the machinery account is credited. So on the credit side by depreciation. Now look at this. Where is the account? Okay, here we have depreciation. I mean the machinery account. First, here, when the machinery is purchased, the first journal entry we are going to show is machinery is purchased. What is the journal entry when you purchase an asset? One of you tell me. When a machinery is purchased for cash, what is the journal entry? Yes, Krishna? Yeah? Again, I'm reading your lips. Make it louder.
Machinery account debtor to cash.
You're looking at the ledger account, huh? You're looking the screen. No. Okay, good. Yeah. The entry will be you purchased an asset. Asset came in machinery account debtor to cash gone, cash account. Correct? Okay. Now come to machinery account. Books of Bajrang Marbles, machinery account. Account is okay, no? You're clear with the account format? Okay. So this is the first entry. Machinery account debtor. That means machinery account is, machinery account is debited. Debited. What? To cash or bank. Both are right. To cash or bank. Bank means it is a bank payment done. Cash means it is a ready cash. So, okay, let's go by this answer. To bank. Or you can write to cash. Both right. Okay? Is this clear? So, you purchased on April 1st. You have purchased an asset. Machinery is purchased for cash or amounting to 3 lakh. At the end of that year, March 31st, depreciation is charged. Come back to the entry. Depreciation account debtor to machinery. So machinery account is credited. By what? By depreciation. This is the first year, 2010. This is what is happening. Machinery is purchased 3 lakh. At the end of the year, the value of machinery has come down. It is depreciated for rupees 28,000. That much amount has come down. You won't get 3 lakh again. After 1 year, the machinery worth 3 lakh. Now the amount has become 2,72,000. What is that figure? How did you get that figure? Balancing figure. Which side is more? Here you have, on the debit side, you have 3 lakh. On the credit side, you had 28,000. So which side is more? debit side is more. Write the higher amount on both the sides. Clear? Balancing figure, you get it this. So at the end of the first year, the value of machinery has become 2,72,000. How much is the depreciation? 28,000. That's it. Now, the next year, what happens? The balancing figure, you'll take it to this side, to the opposite side. Do you understand? Again, it is the straight line method. What is the peculiarity of straight line method? Depreciation is constant. You remember? Depreciation is constant. So every year we will take the amount 28,000 itself. Did you get me? Is there anyone who haven't understood this? Let me complete this. Again, this balancing figure, it has come to the next side, 2011, April 1st. Now, the value of machinery is 2,72,000. Based on the journal entry, again, depreciation. At the end of the year, depreciation is charged 28,000. Find out the balance. Balancing figure 2,44,000. This becomes value of asset by the end of the second year. If you are going to, if you have planned to sell this machinery, sorry, you purchased it for 3 lakh. How much will you get? Now, value of machinery has become only 2,44,000. Understood? Thing repeats. Balancing figure comes down for the next year. Again, depreciation 28,000, fixed amount, constant. Find out the balancing figure. This is the value of machinery at the end of third year. This comes down. Again, repeat. And in the question, you are asked to prepare account for 4 years. That's why we stop here. 2010, 11, 12, 13. 4 years completed. This is how machinery account is prepared. And which is this method? Charging depreciation to asset account. I understand some of you are tired after traveling to school, coming to school, going back to school tired. Huh? Please write down, take it down. Machinery account. Similarly, we'll be doing depreciation account. Now you complete this. Take down this. And one thing I want to tell you is, by the time we reach here, this chapter, you should be thorough with journal and ledger. If you're thorough with it, well and good, no problem. But still, if you're not thorough with ledger, journal, you have to work on it. That is the only thing I need to tell you. And you may ask me doubt. If it is not clear, please ask. Take down this. So the next journal entry is related to closing of depreciation account. Profit and loss account debtor to depreciation. Okay. So in the question, you are asked to prepare depreciation account. Let's see the depreciation account. In the depreciation account, what was the first journal entry? First journal entry was depreciation account debtor to machinery. Correct? This is the first journal entry. And the second journal entry is to close this to profit and loss account debtor to, sorry, second one is profit and loss account debtor to depreciation. This is the two journal entry. Did you get this? Entries? Okay. So we are asked to prepare depreciation account. So you can see in both the entries you find depreciation, depreciation account debtor to depreciation account. You have you can find depreciation account. Two entries are there. So the first one, depreciation account debtor. This is depreciation account. Come to the debit side. To what? Machinery. To machinery. How much is the depreciation? 28,000. Come to the second entry. Profit and loss account debtor to depreciation. So depreciation account is credited. Come to the credit side. What will you write there? Profit and loss account. Are you getting it? The same thing repeats. Why? It is straight line method. Every year we have charged the same amount. 28,000, 28,000, 28,000. Understood? Yes. Take down. Anybody wants the clarification again? Is it clear to everyone? So according to the first entry, depreciation account debtor to machinery. So depreciation account is debited. It is debited to machinery, to machinery. According to the second entry, profit and loss account debtor to depreciation. This means depreciation account is credited. Come to the credit side. By what it is credited? By profit and loss account. By profit and loss account 28,000. Finish. Both the sides are equal. Debit 28,000, credit 28,000. So it is closed. You don't have any balancing figure to bring it down. Next year, 2012, 13, 14, same thing repeats.